The great people of social media, it is with great sadness that I must tell you I had to sell out of one of my favorite funds today. I took some profit. And the reason is because of this. 12.34% year to date, even after all of this. Now, my favorite ETF pays every Friday. You guys probably know what it is. It's XDTE by Roundhill. We need a correction from like here to here, because I was buying here to here. It's up like the entire market's up like 38%, something crazy. This is not normal. Okay, there's going to be a reset, and I'll tell you why. It's probably going to happen tonight in about an hour and a half at 11 o'clock. I just got the news alert from Japan's CPI. Their core was 2.7. It was 3.1, so it is slightly coming down. Japan is planning to raise interest rates a quarter of a point. Now, the Japanese don't believe in debt. I've called the Bank of Japan myself because you can borrow from them significantly cheaper than you can borrow here in America. The problem is they will only borrow for mortgages. The Japanese people do not believe in debt. They know what happens when they get out of debt, and their country isn't based like that. Whereas America, you make money from acquiring more debt. Like that's our own capitalism, and is threaded into red, white, and blue. Not so, it doesn't really work in Japan. It's called the carry trade. So if you guys reflect back on about this time last year, you'll look at it was called, just look up carry trade Japan Google, and you will see that we had a very nice correction in the market. That is about to happen tonight, on top of a couple other economic factors, which is why I sold out of my Roundhill fund. So economic factors, and then I'll go back to Roundhill. And Roundhill is my favorite fund. Everyone knows that. And no, they're not paying me to sponsor that. Economic factors are, this is too high. Okay. If we average 10 to maybe 11% annually, with swings ranging from 20 to, like the market typically does this or this. Obviously, in this case, it's a V-shaped recovery. That swing is usually 20%. We're in the mid 30s. It's too high. Okay. We also have the Fed, fiscal year of the Fed ending in 2 weeks on the 30th of September. Okay. So they're going to have to print more money. We all know what that means. More debt. Okay. There'll probably be some sell-off because of that. The back and forth crap. If you guys go back to last year when this happens, because it's every time the market fell about 1.5%. Okay. And then after that, we have earnings season. Earnings typically don't go very well, especially for like the Mag 7 in third quarter. They just don't, because people aren't necessarily buying anything that would typically inflate earnings one way or another. Maybe NVIDIA, IBM, I'm sure IBM will look fantastic now that NVIDIA just dumped like a couple $1 billion buying up IBM. IBM's earnings are going to be like astronomical. Now that I'm saying that out loud, I should probably just go buy IBM instead of telling you guys about it. But the other ones are kind of, I think they're going to flounder. I really like Q1 because you get like the Christmas rush, but this quarter kind of sucks. Q4, which is in January. Things look good, but this one is going to be like, meh. Usually ends up being a downturn because they miss targets. Fine, whatever. That ends up being about 6-7% every year. You can look at last year's chart. Okay. The reason I sold, right, is because of price sensitivity. Now, mind you, I had a lot. It was a decent amount to where if I would have held on to this specific stock through the ups and downs, because it's a 1-to-1 ratio because it tracks S&P 500 index, which is the SPX. This is the European version. It tracks that. It has a 1-to-1 ratio, so if it falls, it captures all the fall, and the upside is only like 0.8, so you never quite make up for it. The dividends will, it'll average you down slowly. It will, but not the potential loss of could be 10 grand in the next 15 weeks, and I wasn't willing to take that bet. So here's what I did instead. I forego the dividend payment tomorrow. Was going to be like $450. It wasn't really anything spectacular. But what I did instead was went to cash. And I have, I don't know, I have a lot of options expiring tomorrow. But I'll have multiple 6 figures ready to deploy. But only when this drops. I'll start trading options when we start getting the drop, because this is too high, right? This is going to drop. We're going to see 1-2%. When it starts falling, like 3, 4, 5%, because it'll taper off at the end of the year. It'll just kind of curve. I'm going to take that, and I'm going to start doing the wheel strategy on another one of their funds, but a higher concentration of the Mag 7 instead of having the whole concentration of the S&P 500. I like the Mag 7. Personally, that's why I have like Maggie. I like the Mag 7. It basically props up the entire global economy without having like the other, technically there's 503 companies in the S&P 500, the other 496 companies just kind of like tread sideways or give nominal returns. They're not sexy. It is what it is. I like the Mag 7. Everyone likes the Mag 7. It dictates the entire global economy. Great. So I'm going to have a higher concentration of that, but I'm going to do options instead. So I was calculating it out. If I had just held my Roundhill fund, I would have made about, I don't know, we'll say 7,000-8,000 in dividends every Friday. Not every Friday, but like collectively for the next like 15 weeks. But I would have been subject to all of this like this like sideways chop and all of this, which we're going to get some more. It'll probably drop down to like this. It would have fallen by almost the same 1-to-1 ratio as what I'm collecting, right? So you kind of break out even. I didn't necessarily want that. So it was more of I'm taking some risk off the table, which I didn't think I would do, but after finding out Japan was getting ready to raise their interest rates, figured it's gonna happen. But this is gonna happen sooner than later, probably tomorrow, because of quad witching, which is when all the indices all come together. We have the federal budget, we have Japan raising interest rates, and then quite frankly, we're just too high. Like if we just keep going like this, we're going to end up at 30% by the end of the year. It's too high. We still have 2 interest rates to go, 2 interest rate cuts to go. So it would take some risk off the table. When things go down, we'll just hit the options hard, and we're going to make so much more money. Just by my rough calculations, by doing the options chain tonight, it'll probably be, it could be, I guess it's not that much money. It's like an extra 20, 25,000 by year end. If the numbers hold true, and you'll get some price appreciation, which is nice, without having this risk. I don't want the risk. You're going to get to a certain point in your investing career when you stop going, like, money is really hard to make. Losing it is 10 times faster. So I better be thoughtful about how I go about this. That's my video for tonight. See you later, guys. We'll see what happens in the morning. 11 p.m. tonight. Pay attention.